All right, so we're going to be going over a couple more things for Bitcoin, really crypto, all around the crypto market. So it's been a pretty crazy week. We've been kind of going up on the first half of the week and down on the second half. We'll take a look at the daily time frame here. So remember that Monday, or yeah, there we go. That Monday made a little bit. Oh, I guess I'm off. So we pushed up high on the weekend, and then Monday started to drop back down lower. Had to pull back on Thursday. Friday, Saturday finished off, and now we're on the Sunday price action. So, really, what I'm looking for again, I don't really spend too much time on the daily time frame, but you can see how we're having a bit of a pullback in this area. So the market's going to be, I call this a long time ago. Bitcoin's going to keep dropping down to like I would probably say down here, probably in the 40s, high 40s, low 40s, maybe high 30s. That's where I expect Bitcoin to get to. I was basically looking at another one of these. I was basically expecting the market to chop up higher and drop down lower. It's been chopping this whole time. You can see when the market chops higher, we drop down lower. Whenever we're actually in a bull trend, we're gonna start seeing days like this, chopping big days, chopping big days. So that's whenever we're actually in a bullish move. And whenever we see chopping like this, the market starts to sell off because when it doesn't create any gaps on the upside, that means that the market is not going to it's not going to need to rebalance anything. So chopping, then drop down, fills it in, chopping. No, notice how there's no gaps really. Got the small one in here. There are really no gaps on the way down. So chopping, and as soon as it starts to make gaps, we fill it in, and then fills it in again, whatever's on the lower time frame there, drops back down lower, chop on the up, right? So chops on the way up, and then makes the gap down lower. And you can see fair value gap looks very good in here, although we had like a little manipulation week and whatnot. Over here looks very nice. But drop back down lower, chops, and then the expansion moves. But the moral of the story is whenever you see chopping on the uptrend, so to see these gaps starting to be formed on the downtrend, expect it to fill in the gaps and then continue down lower. So, I mean, historically, this is what's happened, right? So chopping, starts to go back down, chop, and then you have those big gaps on the way lower. I would trade on the way up and on the way down if we're in a bullish move. So if we have these big gaps up here, and if it gets into the gap, I would look to buy in here for a longer hold, probably for a week or two, 3 weeks, 4 weeks, depends on how high I'm looking for the market to retrade into, especially now that we're at these lows. What I would look for Bitcoin to do is once it feeds, once it starts to move to a bullish direction, I'll look for the Bitcoin price to expand higher, retrace back into a gap, and then look for the hold all the way back up to whatever we're looking for if I have the capital for that anyway. But this is basically what I'm talking about, right? So we're gonna see these big bullish moves followed by choppiness, and the recession. So on the very beginning portion of the move down here that we go all the way up here to the highest high, didn't quite get the 705, but that's fine. I will look for an entry somewhere here in the gap. So I'll look for some level of resistance, and I will try to look for an entry here. So I mean, same thing. I mean, of course, we're talking a perfect case scenario, right? But ideally, you would look to get a move somewhere in here, maybe on this day if you're lucky. This day, this day maybe, and you will hold that for a while and let it run to whatever you think it's going to get to. Which, like I said before, doing something like that and have those 0.25 and 0.05 expectations, zero point 0.5 and 0.25, they're probably like down here. That's where I want to see the market get to. So you could use that as a way to, from 0 to -1, and got just about perfectly to it. And that's 25, 30, 20% gain, something like that. So we pull the measurement tool out. If you got in somewhere, oh, I'm sorry, from here to there. But if you got in, I'm sorry, yeah, that's gonna be that one there to here. That'd be, I don't know what just happened, but from that low, I don't know what's happening. From that low to this high would be 22% gain. So that's the idea, right? So you can have that expectation from the low to the high. That's what the multiplier would be on the way up. But anyway, enough of that. I guess that's basically how I see price. So we had this big old move, right? Big old move higher. We had that big sell off to fill in a lot of the gaps down here. And you have this another big old freaking up move to the sell off down here. All the way down here is I mean, I highly doubt that we're going to see 20,000 ever again. But I do expect, mid 40s, high 40s, low 40s to get tapped into. But I want to see another big drop down lower. Right now, I'd short if I had the capital. I'd short like crazy right now. But anyway, Now I would have shorted days ago because there's SMT in here on the daily time. Whenever you see a triple SMT on daily time frame, you know that we're going to see something, or double SMT even, triple SMT. Whatever you see here, discrepancies between all the assets, you would start to look for a short opportunity. But not going to get into that. But anyway, that's basically how I would approach the marketplace, in all, because you would see how we have this fair value gap right there, and it gets into it, feeds a couple of times. The SMT's in here really, and didn't want to go all the way up here, which is fine. So this is how I have my quote unquote daily bias and whatnot from there, and you would see the same one down lower. Where was that SMT at? So that one went lower. Was it prior? Yeah, it was prior. So in here to like beat the highs together, I suppose, from here to there. So you see how Bitcoin is bullish and Ethereum is a whole lot more bearish. You would see that here as well. So the same fair value gap was on this day, right? So on this day, you notice how the fair value gap is much different. Ethereum is a whole lot more bearish than Bitcoin is. So I would look to short this one. So whenever they had the SMT and they had the pullback in recession, I would look to short in here for a large position, and I'll probably hold for the low or whatever expectation I have for it to go, lower. So from here to here, I probably have something somewhere around probably 0.25 maybe. So my position would probably look something like this. So on that recession right there, my stop loss would be just right there, because I do not expect Ethereum to be going up higher to this fair value gap at all. But my TP will probably be somewhere in here. And this is for a very large position, so that's what my trade would be. But anyway, this is a big old ramble. To go into what I actually wanted to talk about today, we're on a little tangent. What I actually wanted to talk about is the trades for this week. So I don't know what's going on here. Okay, there we go. So Saturday and Sunday, if the market's playing well, a lot of liquidity, you can definitely see some opportunities taking place here. So this is Friday evening and Saturday. So what happened here is you can see the consolidation period, right? So I'm going to talk a bit about how I read price on Bitcoin and crypto specifically. But whenever we have the market, it's imbalanced. So we have a lot of room on the upside in here. Now we also have some in here and up here. The market wants to fill those in, but we're very bearish right now, as we explained on the higher time frame. So that way, for that reason, we're not exactly looking for the market to jump down so fast. So with all these gaps still in here, I would not be surprised if the market, pushed up higher on this Asian session to go up here, maybe even the London session push up above it. But it didn't want to do that. So we could see that because of this displacement. Now this displacement is very important. So whenever you see this displacement taking place right down in here, that's the market basically telling you the direction it's wanted to take before it makes it. So you would see this consolidation phase for a while, choppiness down lower. Whenever you see choppiness, expect it to continue in that direction. I'm sorry. Whenever you see choppiness, the market is going to continue that direction without any imbalances. And that's an important distinction. So there's no imbalances. That means the market is not looking to make any displacements down lower in this particular area, because it doesn't want it to see it get filled in. Now that's like I said before, whenever you have all of the choppiness here, that's either for a setup or the market tipping its hand to you. So what I mean by that is, you see all the consolidation periods in here. Whenever you ever see any gaps, it gets filled in. And when the market does not make any gaps, the market does not use that area as a place of retracements. So you would see how the market is just chopping, going up and down. But as soon as there's imbalances created, the market fills it in. So chopping, created an imbalance, filled it in, and even went down into here and took out the low for liquidity and created the SMT for that run higher on that Thursday. But the moral of the story is, whenever you see consolidation like this and you see that displacement down lower, this is a perfect opportunity to get into a short. Just touches 705, maybe not if you use the one up here, but that'd be my short opportunity, and it went down lower. And you can even see on a smaller area just like that, that's the SMT. Like, that's the perfect opportunity short, and I look for a short opportunity just there, and I'd make it pretty tight, and then I would do that and then hold for either the lower or whatever. That'd be my trade for that evening. But outside of that, you could see, just to prove my point, choppiness going up, right? Because it didn't want to make any imbalances going up. So choppiness up, displaced down lower, filled it in, choppiness, and then kind of chopped its way chopped its way back down, because the market does not want to see itself make imbalances because then it would have to fill it in. So chop, drop down, filled in all the imbalances, and then create imbalances going down lower. Now, it doesn't always happen where the market fills in the imbalance. Like it's not a requirement to fill in the imbalance like this one here. It's a exact like perfectly open. But basically, the moral of the story is that the market has gaps and it wants to fill it in, but the market purposefully does not create gaps because it does not want to have that place get revisited to. So, with your own study and whatnot, you can see that happen for yourself in real time. But you can see how chop, 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 chop. Market does not want to revisit this area, so we made this big displacement down lower. So chop, 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 chop. The market does not want to see this area, so displacement down lower. Because if it had gaps in here, if there was any gaps higher or like in this displacement, like imagine we had like a big fair value gap down here and then came back up higher, it would want to fill that in, right? But it didn't want to do that today. So basically here, what I look for is look for the market to have a series of consolidation and then a displacement. And my trade entry or my opportunity will be within that displacement. So from the displacement, from the high to the low with that displacement leg, from this high to this low, notice how the market went to 705, created SMT there. This is textbook, right? So we would do the same thing. Displacement leg really started there. So you see just about missed 705 on Bitcoin. Whoops. Just missed 705 on Bitcoin. And then it dropped down very, very quickly. And same thing here. From top to low, that displacement leg, 705, hit it a couple of times. That'd be your opportunity short. And then it would, do its thing. But it's not always, it's not every time where it creates SMT at that 705 or really anywhere near from 620 to 79. It doesn't always create SMT. But whenever it does, it's basically telling you that's your place to get in. Because SMT with context clues is very, very strong. So that's basically it for this this video. But we're going to go through a couple more examples. But you would see, again, so you would see consolidation, displacement. So there was no SMTs or anything within here. And once the market started to tip down lower, created another displacement leg from this high to this low, 705, created that SMT as we pointed out before. That's opportunity to go and shorten here. 1 to 5.46 is pretty good. So same thing, consolidation period, cleared out liquidity, pushed up, made displacement, and then once it made the displacement, there's a low fair value gap in there. Didn't want to fill it in, but whatever. So dip down, push back in. This red candle would be my opportunity because that's the candle that broke there, that created the SMT, right? That'd be my entry, and then shoot up at 1 to 4.9, whatever it was. I don't think there's any setups on this Wednesday. It's pretty clean cut. Anyway, up here, took liquidity out. No displacement. There was SMT here. So you can see how that was relatively equal high. It's close enough. And this one was lower. It's not perfect, but anyway. Cleared out liquidity and then dropped down. So you even see over here. So clear out liquidity, fit into fair value gap, whatever. Took out liquidity, drop back down. You can enter a low probability short in there, or you can enter a low probability short just in here. This is what I would do personally. I definitely enter a low probability short in there, and I'd look to take out Asian session lows. Or you could just look to clear out London if you're a bit more, Asia middle or just about London. And that's a very, very doable, very easy short to take there. Although this is, at 5 a.m., I'm just using it for the example. I would not trade that. I'd be asleep. But from here, took out the liquidity. And you see how important these areas are. So from this high to that low to this low, blah, blah, blah. From there, this is a perfect opportunity. We just took out PM session lows. And this is very important for Bitcoin. So took it out over here and then immediately had a bit of consolidation, just jump out like crazy. But it would be, there's no SMT here. What is it talking about? I think I got these two lows confused with these two lows. But anyway, took out the area right there, and you could definitely enter an opportunity just about in here. But it could very easily continue down lower and fill in the fair value gaps. So this would definitely be a high risk trade. If anything, I probably wouldn't take it because there was no SMT here. But anyway, that was one there. But most of my opportunities take place during the New York AM session. these green ones. Most of those were just examples, but you can see how market was doing series of consolidations, drop down. I'm not trading any of this. Remember, it's too early, but pushes back up and then starts to create its obvious directional change here. So you see how this is going lower, this one higher, this one went lower, oh, this one went lower. So that's your discrepancy. And in this candle, I'll look for a short, and then you would take profits really wherever you want. Could have very easily extended that much lower down to there if I wanted to. And you can even go much lower to, yeah, take out these lows just in there. That's probably where it was at. But yeah, it's basically it. Take out that low, and then the market took it out, and then reversed. But yeah, that's essentially it. You can even see how just took out those lows. This is a high risk buy opportunity because it took out the lows and then wicked up. So that's a high risk buy. And you can even see like there's so much went much further low. So you can even see, yeah. But anyway, can't remember if there's any trades on this day. I can't remember. So high. Yeah, there was one here. You're gonna see that's that high, that's that low, and you would enter a low risk short, and then you would take out like these lows like that in here. Oh, look at that, just missed it. Drop down, and then any SMTs in here. Yeah, so this one would be a little bit higher low, be a lower low, and then it would drop down and do its thing. But yeah, took out the liquidity and immediately reversed. Yeah, I mean, this is pretty cutthroat, or I'm sorry, this is pretty cut and dry. So this is, relative equal highs. This is a higher high, and you can even see like the market's trying to turn down lower and then wake up and then just to clear out the imbalances and then drop down lower. It's like the same thing over and over again. So it's like, kind of simple in my personal opinion. But you can even see like this is, consolidation period, wicked up, took out the liquidity, and then made the SMT. So it's like over and over and over again, same thing. Isn't it crazy how we literally flipped on a dime? Same price. I've never seen that before on Bitcoin. It's crazy. Anyway, that right there, you would see how this one goes to be. Yeah, it flipped on a dime. It's crazy. This is higher low, lower low. See the short data opportunity right there. Probably even lower. I'm not gonna want to put it like that. And then take out all those down in here. So you see, this is London line. This is Asia line. It takes out everything. So just in that one run, see, look, just cut. This is just right here, just perfect, just right in your lap. Consolidation, displacement. Took out the highs, took out the lows, and then didn't create any gaps in here, which is fine. But pushed up. We can even use this right there, and then 709. I'm sorry, 705, close to 709. Created the SMT in there, and then just drop down, sink like a stone. So, same strategy, different day, right? So go back up. What time of day was that? A PM session. Okay. So over here, not seeing a whole lot. So that was relatively low, relatively higher. I don't know. I probably wouldn't call that. But this one would be. I don't know. It's hard to say because consolidation. There's no real displacement really because the candle's there, so it took out liquidity, jumped up higher. This could be a high risk buy because you can see how London and Asia are here, but it took it out on this one. So that could be the market telling you that liquidity was taken on Ethereum but out on Bitcoin to show strength, and so that could be a high risk buy like after a candle or two. So that would be your buy, that'd be your stop loss. You could take out probably something up here 1 to 5. You can even see like the imbalances all the way up in here. So you could even aim for something a little bit more aggressive if you're feeling it. But something like that is definitely possible. And these happen all the time. These are like everyday opportunities. Like we just looked at it. We just looked at an entire week of price action. It's the same thing over and over again. So like these setups don't change. Same thing over and over again. High risk buy because it took out liquidity, and then that's it. Feeds into a fair value gap, and then high risk buy because it took out the liquidity on one asset and it did not on the other. So using the discrepancies between the two assets, that's basically all my trades are. That's all my setups are. You see one thing happen on Bitcoin, Ethereum disagrees. Whichever one gives you that buy opportunity, or like look, it's like consolidation, shoots out liquidity, did not want to drop down as low as Ethereum, that's your buy. So it's like a contrarian type strategy, but it's a contrarian type strategy for something that's very liquid like Bitcoin. So you can even see some. Is there something here? From what I can remember. That one was there. I don't think so. No, I don't think so. That's it. Gives a higher left technically. So this is technically a buy on Ethereum. And here, look at that, fill in the fair value gap, and immediately pushes back up. But this is a higher time frame opportunity. So you would see that this is exactly what I'm looking on the 15-minute. What day is this, Dave? So on the 8th, what I'm looking for is I like to fill in these gaps in here. So what I look for, take out liquidity. Oh, that's on the 11th. 9th, 8th. This is, yeah, here it is. Okay. So consolidation breaks out. And in the New York AM session, that's actually exactly what I'm looking for. So what I'll be looking for is that fair value gap in there. I would put my order on the 25 percentile of this fair value gap. So what I would do is I would have it here, settings, template, OTE, I'm sorry, not OTE, quadrants. And what I would do, that's fine, I'll do it like that. So I put on the 25th percentile of the low. That's where my entry would be. My stop loss would be at the low. So you see how we have a little bit of room. But the opposing liquidity sweep would be in the gaps in here. So these are relatively conservative approaches because it's within this little gap right here, like the first major displacement. So, or really, it's a continuation move from the previous setup. But essentially, you're looking for these gaps. So you can very easily get up into here, and you see how the market got into it. I'm not waiting 3 days for that opportunity to finish up. So I would look for the New York AM session. And I understand this entire move from this high to this low is roughly $158 right on Ethereum, which is pretty significant. Again, 7%. So it's quite a significant move from this high to this low. And all we're asking for is like 25% of that. So we're looking for like a 2% move, right? So what's 25% of that? $30. So yeah, $30 right there. $30. We're looking for $30, right? And that's very easily doable. I mean, you are not asking for a lot here. If you ever feel like you're asking for too much, you probably are. So just pump the brakes a little bit. But this is like the most repetitive, easiest, most like money printing type strategy on the market. Like it's literally telling you that it wants to go higher. Look, consolidation, drop down lower, and then it makes big displacement up. Like I would look for this fair value gap, the lowest fair value gap, to get filled in. So essentially, how I pick fair value gaps or where I would put my entry level would be, if we just clear this out, when the market had the displacement from this low to this high, or this low to this high, look for when the market made a fair value gap. The lowest fair value gap, the lowest meaningful fair value gap, have your entry order at 25% of the extreme. The extreme is the lowest in an uptrend or the highest in a downtrend. So there's no imbalances in here. So I would use the 705, wait for SMT. So this one made lower, this one went higher. That'd be my short on Ethereum. I'd short here, right? It's because it's SMT, right? That'd be my short. But on this particular opportunity, it's literally telling you, took out liquidity, we made a retracement. I mean, it's literally telling you, screaming at you, buy it right now. I'm about to flip sides. Right there, that'd be my buy. Buy, a little bit more retracement, and then it just skyrockets for the next few hours. And it even fills in the outstanding gaps in here, literally sitting there waiting to get filled in. Right now, this is like the easiest, most cut dry, simplest strategy that you can go and find. The market gives it to you every day. Just gives it, just lands in your lap every day, and never changes. It's the same strategy over and over again. So it's like you've seen the examples for the past. We can look for some more, but you've seen the examples multiple times throughout the weeks. It's been the same thing every single time. So no setups here. You're not promised setups every day. If you don't know that now you know. But drops down lower, all that, whatever. There's no opportunities there. And then you see the drop down lower here, drop down lower, makes our retracement, pushes up higher. You see how we have this SMT in here. So from this high to this high, I know it's not perfect, but it's not gonna be perfect. Then this high to this high. This is lower, this is higher. I'll look for my short opportunity in there. Stop loss would be at the high. TP would be at the low somewhere, 1 to 5. I mean, you cannot find a strategy that's this cut and dry. And if you want to ask for more, like the Asian lows down here, you're going to get taken out. This is why I always look to be conservative while I'm trading. You can even ask for the London low there, but that's even, a bit much, a bit of a stretch. And the reason why I say that is because you're asking for the extreme down here. And I'm asking for the complete low of the London, right? So whenever it starts with liquidity in reverse, I'm looking for the market to make a complete reversal from, I'm sorry, not a complete reversal. I'm looking at to complete the balance to all the way down to the London low, which took it, right? But it didn't do that on Bitcoin, right? This is why we pay attention to what side we're trading, is because one side will give it to you, one side wouldn't, because it's stronger than the other asset. So here, that's pretty much the same. From there, what am I doing? This one. There you go. We'll make this OTE. There you go. Didn't quite get to 705, which is fine. It's not gonna be perfect every time, but 602 or 620 roughly, right? That's it, right there. And then we would have that go lower, they go lower. So we did have double SMT, which I didn't really do much, but anyway, yeah. So take out liquidity. We create SMT from that low, this high, this low. So made a lower move. That'd be my entry, probably somewhere in that candle, and then that'd be it right there. Look for that. Not every trade works out in your favor, so that'll be the one off. But probably wouldn't even enter right here. Well, I guess I would. I would enter right there, mainly because displacement happens. I'll probably enter right there. Yeah, but I would enter right there. High risk short. But anyway, that just goes to show, out of the past 10 trades that we've had, one's a loser. So it's not, you're not breaking the bank there. But anyway, more opportunities here. Lower low, higher low. My entry is on the way back up, and then it would take off. And it's pretty simple. London high is right there. Took it out. That's it. Pretty simple. What else do we have? So from this one, probably do to like that there, and then this one to there. We have an opportunity probably on the way back up here, and then probably look for whatever gap is prior. I guess we're in a good balanced area. I probably wouldn't trade anything. The reason why I say I wouldn't trade anything is because we seem pretty balanced. I have to look at it on a different time frame to see where I'd put my levels at, but it's not worth it for this example. But you get the idea, right? Lower low, higher low, right at 830, or that's 9. Okay, cool, 9. That's fine. So that's it. There it goes. I mean, that's pretty much it. If you have any questions, feel free to text message me if you have it, my Discord if you have it. If not, there's my email in the description. You're gonna see 4. No, it's 11 p.m. I don't really care. Yeah. You see relative equal low, higher low after take out the lunch lows, reversed. We're looking for displacement leg, fill it back in, and we'll see what we can do. If I had to guess, it's gonna fill this in. So I'm looking for a bullish move to fill in these gaps, probably sometime on Monday. So yeah, I looked for the market to open up Sunday evening, Monday, and fill in a lot of these gaps. Maybe even take out the highs in here. Maybe, I don't know how bullish or bearish is going to be, but basically what I'm looking for is these gaps to get filled in pretty quick. I imagine these are not going to be left open for too long. Maybe not up here. Maybe we'll leave these alone. This one's alone, but we're definitely going to fill in London 100%. Those are my thoughts. But yeah, as I mentioned, if you have any questions, just let me know.